Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for August 22nd, 2017. Hey, folks, I hope everyone had a great time out there seeing that eclipse yesterday. I know I had a great time. Um, for members and all, I hopefully here soon we'll have some photographs to share with you. I had a great time doing that. So hope everyone had a good time. The market yesterday was a little bit, choppy, kind of as expected. We had pretty light volumes, pushed down here initially during the day and then rallied back up. And what's nice about the diamonds here is that it actually mustered enough energy to rally back above that 50-day moving average, leaving a little bit of a hammer pattern here. Now, a lot of folks will look at a hammer pattern and just immediately think bullish. Please remember that a hammer pattern requires follow through, and it looks like we may get that follow through today. Futures are trying to give us a gap up open, and you can see we're looking to gap up just slightly higher than where we were yesterday, about 30 points. But also pay very close attention to the fact that we are still underneath this downtrend. Our downtrend had failed, and right here we're underneath that downtrend. We're also underneath price support levels that are pretty darn important, that we're going to have to get back up there and challenge those resistance levels. And I think the question is, will the bulls have enough energy in them to actually repair some of this technical damage that has been done? If we look at the SPY now, I have mentioned this before, and I still think it is true that the back has been broke of the SPY, breaking this long-term trend and following through the way we did to a new low. Not a good sign. Obviously, it can be repaired and will be repaired, but I don't think it's going to happen just, at the drop of a hat. It's going to take some time. And we've got lots of resistance that we're going to have to work ourselves back up through before this starts to look any good at all. This downtrend is probably the thing that you want to focus on the most. The fact that we have lower highs and lower lows, sets us in that downtrend. Any rally back, even clear up into here, will be something you'll want to focus closely on the price action, because any failure in here could send us to new lows. Okay, and I think, this is just me guessing right now, I would be kind of surprised if we don't at some point in time test this price level right here. Okay, so watch that closely. And if we put the moving averages on there, you can see that's not breaking us down too much, but it's just giving us a good launch pad to be able to recover from. So I would be really surprised if we don't eventually touch this down here. Let's take a look at the Qs. The Qs, a little bit better job, but yesterday they gave up that low here on the 10th. And the rally back didn't quite get us positive. We do have still kind of a hammer looking pattern here, but nothing impressive. Notice we gave up the overall uptrend. We're below the 50-day moving average, so we're not in a great position here on the Qs. Now this morning it looks like we're going to bounce up and get right back above that 50-day moving average, and that's positive if it can get up there and hold. But once again, we have to focus in on what our overall price pattern is. We got a lot of work to do to repair all this damage. So if we were to kind of draw in a downtrend here, these lower highs and these resistance levels that we're going to have to deal with in this this price action work, we've got a lot of energy that's going to have to be expended to get us back up here. And anything all the way back up here could still provide us that failure to a new low. So watch that closely. IWM is just not in a good situation at all. IWM clearly downtrending below the 200-day moving average. And, well, I would be extremely surprised if we don't test this area down here. This is a very strong support level. And I would suspect that eventually it will just draw it down there like a magnet. Any rally back up into this area is something that we are going to have to watch very closely for the potential of that next failure pattern to bring us back down here. So I'm not going to issue any kind of a bearish statement or anything like that, thinking that we're just set up for a major wreck here in the market. But technical damage like this normally takes some time to repair. We could chop around a while. We could chop around and move up and move back down, set a new low, and then finally begin to bottom. So, bottoms take time. And just like right in here where we sold off and we actually got into a technically correct downtrend, notice how long it took before we finally came up out of there. So this rally back, failure again, retest of the lows, and then we got the rally. So it takes a while sometimes to recover that. I sure wouldn't want to be the guy speculating that we should just rush in and buy the dip like you're hearing in a lot of places. Just buy the dip, buy the dip. Well, buying the dip at this point, you are buying into a technically incorrect pattern, and you are subject to a big whipsaw back down. Remember, all of the news and everything that's out there in Washington, D.C., and everything that's going on can affect this market in about half a heartbeat. So don't just blindly rush in thinking that those little catchy phrases tend to break people a lot. Kind of like the sell in May and go away. How would have that worked for you this year? You would have lost a ton of money had you done that. So, just the mantra of buy the dip may not work this time. And you always want to make sure that you are correct in the patterns. And I believe personally that our job, the biggest job as a trader, is to manage ourselves. The chart, the price action, things like that, that manages itself. All we can do as a trader is manage our emotions, and we watch and wait and prepare for trades that keep us in a high win-loss ratio trading. There's always going to be losses as a trader. Minimizing that is what we have to do. And speculation, when there's no proof of a low, is not one of those ways to improve your win-loss ratio. Just saying. On the economic calendar today, we've got just a couple non-consequential reports out there. Housing price index and Richmond Fed manufacturing index, and a bond announcement or a bond auction. We'll start getting into some heavier reports starting tomorrow on the economic calendar. Over 60 companies reporting today, a few that might be of interest to, to folks, like CRM, Intuit, Toll Brothers. Those are something to be focused on today. And just make sure that you're checking those earnings reports, that you're not getting caught by an earnings report just simply because let's face it, you were too lazy to check, and that can cost you an awful lot of money. Make sure you're checking those earnings reports and have a plan how you're going to prepare and deal with those. Well, everyone, if this is the first time you've seen this information, hey, I put this out every day. It's part of my market prep. It's very important to me. I don't believe in luck. I believe in preparation. And if you would like to receive this information every day, please do me a favor and just click on that subscribe button on YouTube, and then the follow me button on Facebook, because I do put this out every day, and then you'll get a notification when I put this information out. I do want to thank all of you that make me a small part of your day. It is very humbling, all you folks that have subscribed and are following. I do appreciate that. And feel free at any time to, click that thumbs up button, give me a like, and give me a comment here or there. That also helps those algorithms show this content to more people. So I do appreciate it. Everyone, take care. Have an awesome day. I wish you fantastic profits, and I will talk to you all soon.